If you're struggling to become a profitable trader, I want you to use the strategy that I'm going to share with you in this video. If you are still confused with trading, you have found the correct video. I'm going to share with you a strategy that will make you instantly profitable. If you find daily buys confusing, if you are unsure where to place your trades, stick around because in this video I'm going to share with you exactly where you need to place your stop loss and take profit. I'm going to share with you a complete set of rules that will invalidate your trade, and I'm going to share with you multiple trade examples so that you can be sure that you understand the strategy completely. So over here we have a complete set of rules that I want you to write down when using this strategy. The first rule is I want you to go ahead and I want you to mark out the previous day's high and the previous day's low. So if we have a candle here, we are going to go ahead and we are going to mark out the previous day high and we are going to mark out the previous day low. The second rule says we have to wait for a sweep of the PDH or the PDL, the previous day high or the previous day low. So we are going to wait for the market to either take out the high, or we are going to wait for the market to either go ahead and take out the low. So let's say, for example, price went up and took the high. Now, all of this takes place on the 15-minute time frame. So make sure that your chart is set to the 15-minute time frame, not the 5-minute, not the 1 minute, the 15-minute. Now, rule number 4 is we are going to enter on the very first fair value gap that is created. We are not going to wait for a market structure shift. That is not how we are going to trade. Because people keep on trading market structure shift wrong. They trade change in state of delivery wrong. And so I've created this strategy for you so that you can be 100% sure that you're using the correct entry method. So when the market comes down and it leaves a fair value gap, forget about market structure shift. Forget about a change in state of delivery. When we get our first fair value gap, that is where we're going to take our entry off of and target a 2-to-1. I want you to focus on rule number 5. Rule number 5 says that we only trade during kill zone hours. We only take an entry. The market can hit our stop loss and take profit outside of kill zones, but I only want you to enter during our kill zone hours. The hours are as follows. It is from 8 p.m. to midnight, from 2 a.m. to 5 a.m., and from 7 a.m. to 10 a.m. So, 8 to midnight, from 2 a.m. to 5 a.m., and then it is from 7 a.m. to 10 a.m. I only want you to take trades during these hours. Please do not take a trade outside of the hours and blame the strategy if it doesn't work. And rule number 6 says, I want you to go ahead and take a minimum of 2R. So, when you move on to live examples, I'm going to share with you exactly where you need to place your stop loss. We are placing a stop loss above the swing high that grabbed liquidity, or the swing low that took out the previous day low. That is where we are going to place our stop loss. Another important thing to note here is I want you to only trade it on these 3 assets. I want you to only use it on Euro USD, GBP USD, and on gold. These are the 3 assets that I have found the most success with using this strategy. You can try NASDAQ, but again, these are my top 3 picks for using this strategy. If you're enjoying the video, go ahead and make sure that you join our free community. It is a place where I share my trades. I share my market analysis every Monday morning. I share a weekly analysis. We've got a very engaging community here, guys. People ready to help you, ready to guide you. And we are busy running a giveaway worth $500. And so in order to be considered in the giveaway, you must be subscribed to the YouTube channel. You must be a member of the free community. And if you leave a like and comment on the video, it will increase your odds drastically. Guys, make sure that you head to the link in my description, to join our giveaway and to join our free community, and I will see you back in the video. So now that you understand the rules, how do you actually take a trade? What do you wait for? Here I've explained it to you. Here I've drawn out a bearish daily candle. And let's say, for example, here we have our previous day high. And over here we have our previous day low. I have marked it out here for PDH and PDL. So what are we waiting for? We are going to go ahead and we are going to mark out our previous day high. And we are going to mark out our previous day low. And we are going to wait for price to take out either the high or to take out the low. Here we can see the market takes out the previous day high. So what do we wait for? I do not want you to wait for a market structure shift. Please don't wait for that, because some people get it wrong because it can be a subjective thing. Do you use a wick? Do you use a body? What do you use for a market structure shift? So in order to keep trading as simple as possible, I only want to wait for the very first fair value gap that forms in our direction. If we take out the previous day high, our direction will be bearish. If we go ahead and we take out the previous day low, our direction will be bullish. So the fair value gap, if we take out the low, I want a bullish fair value gap. If we go ahead and take out the high, I want a bearish fair value gap, because that will be in our direction. We want to keep trading as simple as possible. And if you're new to this, I know you can get confused with all the concepts floating around on the internet. So I only want you to focus on this one strategy, guys. You trade one strategy, and you please do not strategy hop. If you get a losing trade, do not think the strategy is losing and then you get a different strategy. You're keeping yourself in a circle of unprofitability. So back to this. We take out the high here, and let's say, for example, we get a fair value gap here. This is where I want you to place your limit order. So we go ahead and we place our limit order here with our stop loss above the swing high. And I want you to target a 2 to 1. That is how your trade is going to look like. So if we go and the market takes out the low, we wait for the very first fair value gap to form, and that is where we place our buy order. Our stop loss will be here below the swing low, and our target will be over here where we can get a 2 to 1 risk to reward. So what are we waiting for now? We are simply waiting for the market to go ahead and tap the fair value gap, because that is where our limit order is set. So we are waiting for this market to come down, tap the fair value gap, and either run up to our target, or this market can turn around and run to our stop loss. But that is what we are waiting for. And the reason why I want you to take a 2 to 1 risk to reward is because you can make very good money with a very mediocre win rate trading 2 to 1. With a 2 to 1, if you win 33% of your trades, you are break even. So you can lose 60% of your trades and be a profitable trader. It is a very beginner-friendly version of trading. And that is what I want you to focus on. If you are new to trading, I want you to focus on keeping it simple. Do not go ahead and chase the very complicated strategies and very complicated methodologies that you see people trading on social media. So over here we are in euro dollar on the daily time frame. And so what are we going to do? We are going to go ahead and we are going to mark out our previous day high, and we are going to mark out our previous day low. And we are going to drop to the 15-minute time frame and wait for one of these two zones to get hit. So let me just move this along. There we have our high. There we have our low. And we are going to play price forward and just wait for one of these two zones to get hit. Let's see. Don't get a tap yet. Here we go. Okay. Over here, we have a run above previous day high. So what are we expecting now? We are expecting this market to draw to a fair value gap and then drop down lower so that we can go ahead and we can take our sell order. Now, we haven't had a fair value gap created yet, so we sit on our hands. Even though there's been a change in the state of delivery, we are not going to trade because we haven't received a fair value gap. We have to keep trading simple. So here we can see we push higher, and we are waiting now for a bearish fair value gap to create. Do we get one? And we do get one. If I zoom in here we see that we have a bearish fair value gap. So what do we do now? We go ahead and we simply place our sell limit order there, and we put our stop loss above the high, and we target a simple 2 to 1. That is what we are going to do. So if I move forward, we see that we have tapped into this trade, and let's see what happens. Here we go. The market runs up, gives us a little bit of a drawdown, comes back down and smashes our take profit. Do you see how simple this strategy is, guys? If you were to go ahead and you were to overcomplicate this, let me just remove this. Here we have our previous day high. After we sweep previous day high, price comes down and gives us a change in the state of delivery. So if you were to trade an order block or a change in state of delivery, you would have lost this trade. But we simply waited for the very first fair value gap to get created, and we simply took a sell limit order, and the market runs down to hit our take profit. That is how simple trading is and can be. Please do not go ahead and overcomplicate your trading. Over here we have our second example. So again, what are we doing? We start on the daily time frame, and we are marking out our previous day high, and we are marking out our previous day low. So now we wait for one of these two zones to get hit. We drop to our 15-minute time frame. Let me just draw this along. Previous day high, previous day low. We wait for one of these two zones to get hit. If I play this forward, let's see what happens. Okay, price runs through our previous day low. Let's make it liquidity. So now we wait for the first bullish fair value gap to form. Okay, what do we get here, guys? If I draw this along, we have a bullish fair value gap. And I use this example for a reason. Okay, so simply, I said we simply wait for a retest of that fair value gap, and we take a 2 to 1. If I play this forward, let's see. Okay, what do we get here now? This gray box is our New York kill zone. Price has exited our kill zone, so we're not going to take this trade. We are going to delete this order, and we are going to wait for a kill zone to happen. Let's see what happens. Okay, here, what do we get? We get a tap of this fair value gap within our Asia kill zone. So we take the trade on the retest of the fair value gap. We put our stop loss below the swing low that took out the previous day low. We place our stop loss below it, and we simply target a 2 to 1. I do not want you to overcomplicate it to target market maker models or target liquidity. I simply want you to target a 2 to 1 risk to reward. Keep it simple. Let's play this forward to see what happens. There we go. The market taps our fair value gap, and we run up and we hit our target of 2 to 1. Do you see how simple trading is, guys, and how simple it can be? So here we have an example from gold. We start again, and we start on the daily time frame. And what do? We go ahead and we mark out our previous day high, and we mark out our previous day low. And we drop to the 15-minute time frame to wait for one of these two zones to get taken. So here we have our previous day high. Here we have our previous day low. Let's move this along. And we simply go ahead and we wait for one of these two zones to get taken out. Okay. That was a little bit quick. So we see here that the market went and grabbed previous day low. So now what do? We wait for the very first bullish fair value gap to form, and then we take a trade. So here we can see that we have a gap between this high and this low. Here we have our bullish fair value gap. Let's just mark it. And we simply go and we take an entry on the retest of the fair value gap. And where did I say we put our swing? We put our stop loss below the swing. So we go ahead and we put our stops below that swing, and we go and we target a simple 2-to-1 reward to risk trade. So let's play this forward to see what happens. And there we go. We are out of our trade. Stops below the swing, enter on the very first fair value gap that's formed after we sweep out our previous day high or low, and we take a 2-to-1 risk to reward. It doesn't matter that the previous day high was swept before the entry. That doesn't matter. The only thing that matters is which side gets taken first, and we go the opposite. That is important to note. Here we have another example on gold. After we've taken this buy, what do? So we go ahead and we mark out our previous day high again, and we mark out our previous day low again. We drop to the 15-minute time frame. Let me just tidy everything up. Previous day high, previous day low. Let's see what price does. Price takes out our previous day high. We take out our previous day high, and what do we wait for? Now we simply go and we wait for the very first bearish fair value gap to form. We have nothing yet. Nothing. Okay. What do we have here? Here we have a bearish fair value gap that just formed. But we only take a trade during kill zone hours. So here we see New York kill zone starts at 7 a.m. Here we are on the 7 a.m. candle. So we can go ahead and we can take our order from the retest of this fair value gap. Simply place our sell limit order there. We put our stops above the swing that took out our liquidity, and we go for a very simple 2-to-1 risk to reward. Let's play this forward to see what happens. Here we can see price action tapped us in within our kill zone, and if we play this forward, what happens? The market runs a bit, runs down, grabs liquidity, and then continues with the overall trend and stops us out. So, very important thing to note here. You can see that this market run down to grab liquidity below these lows. So what I want you to do is, and I want you to backtest this to make sure if you're comfortable with it, I want you to take partials at a 1-to-1 and move your stop to break even. So if you took partials at a 1-to-1 on this trade, you would have had 0.10 or 0.20% gain, and the other half of your position would have been stopped out at a break-even trade. So you wouldn't have walked away being a loser on this trade. You would have profited some gain, and then the market run and turn around and stopped you out. Guys, I hope you found value in this video. Go ahead and apply this to your trading. This is going to improve your trading dramatically. Please leave the video a thumbs up, leave the video a comment, and if you've got questions, join the community and ask your questions. You can share your charts. I come in every morning and I answer every single question that is in the community. Remember about the giveaway, and I'll see you in the next video.